All righty, good afternoon, good morning, depending on where you're at. Great to have you aboard. Start off by apologizing about my voice here. Still trucking along here with it, and hopefully it'll be improving here as the week progresses. I want to talk about the upcoming challenge and the upcoming 3K to 100K challenge and where we're looking at that. Look at past challenges. Those of you who have been on the last challenge, this has been a challenge that has not worked. It's been one of our now 5 losses. Okay, so in the past we've had 10 challenge attempts. This graphic will be updated here. It will say 11 challenge attempts with 5 losses. Okay, it's something that we know is part of the nature of the challenge that we'll lose 3,000. But I want to answer some questions in regards to the challenge and how we do that. The most common question that I get is, how did the challenge come about? What compelled us to go with this challenge? Well, this challenge came about. Where was a in fact let me go pull up the chart. We had a time here in 2007, and it was a couple rough months from a trading standpoint for me. I had ups and downs, and every trader does. But at this time, uh, I was managing other people's money, right? So it's one thing when you're managing your own money to go on a losing streak. It's another thing when you're managing other people's money to go on a losing streak, right? Especially since when I was a fund manager and managed money, the only way I made money is if we were profitable. Okay, and if we weren't profitable one quarter, we had to make that money up the next quarter before we made any money on top of it. So we only ever charged on the gains. So for me, and spending all my time trading and trading other people's money, it was very important that I not have any kind of serious drawdown. That we consistently make some money. And it's one thing to hold stocks and investments and whatnot. You kind of go with the ups and downs of the market. You hedge and do the proper things there. But we would add option trades into it and look to generate some bigger gains with these option trades. But take a look here at June of '07, June and July of '07. This is the first time where I was looking at the market and looking at it and saying, you know what? Just some of these signals that I'm used to aren't working. I ended up being buyers at the top and seller at the bottom all through these 2 months of July. And August, I was pretty much sitting out. Fortunately, the action in August here made for some really good upside plays. Was able to do well through August and into September. But this is the first that I went and I said, you know what? This is a threat. From a trading standpoint, this is a threat. Um, some of the stuff I've been traditionally using isn't working. What do I do? Do I change what I'm using? Do I just say, you know what? It'll come back. It'll start working again. How do I go about that? How do I shift that? And one of the things that happened is we started to have a lot of success with some of our option trades. And one of our investors, one of the gentlemen whose funds we were managing, looked at the success with options, and he said, "I don't know why you guys are really messing with the stock and the investments. Why don't you just trade options?" And I sat down, we talked for a while. I said, "Yeah, it's drawdowns. With options, you can kill your account." I had once experienced a major drawdown from 100,000 down to 40,000, and they're not pretty, and they're hard, they're difficult, but there's something that almost every option trader goes through, unfortunately. Okay, And so I said to him, I said, look, we got millions of dollars on the table. It's one thing for me to have a drawdown on an individual trading account where I have 3 grand in play or 10 grand in play. It's another thing to have a drawdown when I have $10 million, $15 million in play. That's a lot different. Okay. That is a totally different scenario. So he looked at me and he said, all right, well, why don't you just play with 3,000 and see what you can roll it into? See what you can do with that. So basically, my trading partner and I, we said, fine, we'll do that. We'll see what we can do. And we took $3,000 and we started trading options on that and tracking the trades. We didn't really have any rules to it. At that time, we could do some spreads and other things, and because we had the margin available, we could sell a few options, but bottom line, in 4 months, we got to $100,000, and I remember this gentleman, he had flown out to kind of see what we were doing and sit down and talk with us. And we sat down, we were talking to him. And the thing about hitting that $100,000 is we had put out all those trades, okay? And we had put them out publicly online, and when we made them. And so we were kind of putting them in this little blog, and that was just for our investors to track and kind of see what we were doing there. And the concept, never really kicked into us. We said, oh, okay, we did it, great, great, wonderful. We went on our way. We continued to trade in the funds and to go about things. And then, '09 hit, or '08, and we did very well in 2008. We did very well in 2009. 2010 hit, and things started to get a little more dicey, and we weren't very comfortable holding a lot of long positions, especially with stock. If you remember, for those of you who remember the environment back in 2010, we're talking about QE, we're talking about just a lot of historic things, Europe, and in hindsight, it looks like, oh, just part of a bull market. But during that time, it was pretty darn ugly. And so we basically went back to this whole 3K mentality, and started to kind of trim back and do this mentality within our funds. And the first time we did it after hitting the 100,000, the first time we tried it again, we lost our $3,000 in less than a month. It took us 5 or 6 trades to do that, and wasn't a great, but hey, we said, all right, let's do it again. And overall, we ran it several times, and these were our results. Now, eventually, and I've talked about this before. Eventually, I said, you know what? I'm sick and tired of managing funds. It wasn't fun to me. I love to trade. I love to trade options, trade stocks. I love the market, but managing funds on a day-to-day basis just was a drag. It wasn't very fun. We were doing really well. We had some great success, but in some ways we were kind of a victim of that success, and trying to replicate that all the time. It just became a little more stress. I finally just said, you know what, enough's enough. We backed away, and basically didn't do anything for quite a while. Just went trading my own little account and moving on. And then a couple of you who are out there, came back to me and said, "Hey Jeff, you're still trading. Why don't you throw your trades out there? Why don't you let us know what you're doing?" And you offered to pay for it and other things like that. And I was initially kind of reluctant to the idea, but what we did is we opened up a blog, and it's still up. It's still posted. You can go see it now, but it's WordPress or TraderMinute.wordpress.com, or WordPress.TraderMinute.com. I forget the flip of that, but it's one of those. You can go out and check it out. It's out there now. And we started to, I started to just throw trades out in this whole 3K to 100K format. And we ended up hitting up over $40,000 within 2 months. We ended with 21,000. I took a loss on FCX. I believe Kay, you mentioned FCX earlier today, but took a loss on FCX. But in all, in 4 months, we went from 3,000 to 21,000. And fine. There was a lot of interest for that, and so we turned around. We developed a kind of a makeshift trader minute. Said, okay, you know what? We know we're going to have limited capacity because it's not like I can have unlimited people watching the trades and copying without really affecting things. We started another challenge in March. We ended up doubling our money, a little more than doubling it. We had gotten off to a start from 3,000 to 10,000, but kind of struggled since. And then this last challenge, we end with a $3,000 loss. The whole mentality and idea of this challenge, okay, the whole idea of it is it's a game. It's not an investment retirement type strategy. It's using perhaps the riskiest aspect of the market in options and saying, you know what? We know we're going to be right. We know we're going to be wrong. And sometimes we're going to be right a lot, and sometimes we're going to be wrong a lot. And if we go on a killer loser streak, which unfortunately that's what I've been on, if we go on a killer loser streak, we want that to be contained to where we're not losing huge amounts of money. We go on a halfway decent winning streak. I mean, this 21K gain, we were only getting 50% of our trades right. And we had 700% on our money at 50% of our trades working. We have anywhere near decent halfway decent trading. We want that upside to really be there. And that's where the whole mentality of the challenge comes. So how does it work? How do we do this? Well, let me just pull up a note here. Let me show it to you. The whole idea behind this is to basically lose hundreds, okay, gain thousands, and that doesn't always work out that way, but that's kind of the mantra that goes through my head when we're talking about this. And it's in the market, it's a matter of risk versus reward. Okay. And with the challenge, our risk is the $3,000. Okay. That is the risk. And so on any trade, I'm now no longer locked into saying, well, I have to do A, B, C, D. I have to do this. No, we can adapt. We can shift. We can look at the market and go after what we're seeing there and say, you know what? Our risk is already in play. Me putting a little extra on this trade, or me holding this trade, or doing something with that, it's not increasing my bottom line risk here. Okay. Generally with the challenges, we average 2 to 3 trades a week. Now, some of you are going to say, Jeff, the last challenge, you only did 8 trades. I believe it was 8 trades, 8 or 9 trades in last challenge. Okay. Why did you only do 8 trades in the last challenge when most challenges you do 2 to 3 trades a week? Well, that simply comes down to the matter of risk here. What happened? Well, our first trade, we made what, $800 with Disney, and we took the account up to 3,800. And then basically we went on a losing streak. We had 3 trades go against us, and we were down in the 2,000 area. At that point, I got to get a little more conservative. I can't afford major drawdowns. I know the drawdown could happen, but I can't afford to overdo that. So I'm looking one trade at a time. We dip down into $500. We go out and we buy Chevron. Chevron comes back for us a little bit, and then we're forced to kind of put our foot in the sand here and say, all right, here TLT, and see what happens there. So when the challenge and looking at my past challenges, when they're not as successful, we're not doing as many trades. And that's the idea. If you're not hot, if you're not trading well, if you're not seeing the results, well, you don't want 40 trades out there. Lowering that down helps to keep that away. But when you start getting hot, more trades and building the dollar amount in proportion with the gains is what really builds. And so that's what we will do. We will generally put about 60%, okay? We'll put 60% on the first trade, 60% of the account on the first trade. And we're looking to say, you know what? We have about 30% risk on that. So, worst case scenario, we're down, $600, okay? And kind of keeping that mentality to start to build. The way I look at the game, is we basically need 6 doubles. Okay? And doubling your money with options is not very difficult. Okay? It doesn't take a whole bunch of good trading to make that happen. But basically, we need to go from 3,000 to 6,000, right? Then up to 12,000. That would be the second double. 24,000, 48,000, and then 96,000. Now, give or take a few thousand, but essentially 6 doubles here, and we're on our way. Now, during this time, we hit 10,000. I pull the initial $3,000 out. We hit 40,000. I pull 10 grand out, just so that, hey, you know what? We're taking some reward on the way up, and that's the way I like to go about it. At 40,000, 10,000 isn't going to be that big of a difference. At 10,000, 3,000 isn't that big of a difference. Okay, so that's kind of the mentality and what we're looking for. One of the things with the challenge is we will occasionally just hold things when probably we shouldn't. Okay, knowing, hey, you know what, we have some really good reward potential. Yeah, the probabilities may not be in our favor, but if it's right, it'll pay off a lot more than if we're wrong. Okay, and so we kind of will take a little bit of that mentality and that approach. We run 3 of these 100K challenges a year. Okay, this will be is how we're doing that. Obviously, if we hit $100,000 before 4 months is up, we will, we'll start a challenge a little bit early. But generally, I like to start a challenge in November simply because November and December, and even January, February, from a seasonal standpoint, is a lot more predictable. I like doing March to July, typically because you get a nice run up in the market in March and April, and you get strong pullbacks as the summer months approach. I'd like the summer months as well because the volatility increases. Unfortunately, this past challenge, I haven't been as fortunate. Many of you have asked, hey, is it because the technicals or something like that? No. I mean, bottom line is just the trades I've picked. It's not that the signals have been bad. It's, hey, there's 3 stocks making the same signal. For some reason, the one I've picked hasn't worked. I look back at the trades and the setups, and I go, I can't argue with the setups. I look at the setups on this last challenge that hasn't worked, and then I go look at the setups on this challenge that had the 21K gain. And I tell you what, the setups on this 21K gain, I made a lot more mistakes then than what I made on this last challenge. Okay, that's the nature of options. Okay, that's the nature of options. So please do not take a look at this challenge and say, you know what, this is my retirement strategy. This is, something I'm going to, allocate all my funds based on these types of things. No, okay, please take this challenge for what it is. Okay? Couple questions I get asked. Number one, Jeff, can I put more into each challenge trade? Okay. One of you asked me if you could do a 30,000 to a million. Said I'll just times everything by 10. My answer is you do what you want. I'm not an investment advisor. I'm not a fund manager anymore. Do what you want. I'm showing you what I'm doing. Okay, I'm showing you what I'm doing, and I run all my trades by my trading partner. Um, but I don't run my trades by anybody else. Um, I don't. I don't take suggestions from customers, or even back in my fund managing days when a client would call me up and say, "Hey, what do you think about getting into Microsoft? Maybe we should get into some." I would avoid Microsoft at that point. Why? Not because I'm too prideful to take a suggestion, but if I take a suggestion and that suggestion doesn't work, I found out very quickly that it pretty much makes that person feel pretty bad. It's one thing to have a trade and have a trade not work, but bottom line is it's my responsibility and my burden to bear with that, and it's something that I'm used to, and it's nothing that I want any of you to ever feel bad about. If you were to send a trade out to me and say, hey, you know what, we should get into this, and I were to go get into that, even though I would say to you, no, you have no responsibility, not that you would feel that. And I don't want any of you to feel that way in any way, shape, or form. In fact, you'll notice a lot of the stocks we talk about in the chat, I avoid. I don't go out and trade. I trade some of my own, and that's simply to take some of that off of those who I know are following. Do we make these trades live? The answer is yes. These trades are made with real money in a real trading account. Whose account do we use? Okay, I don't use my own account. The reason being is legal issues. I'm not allowed to use my own funds. I can be I can be I can be in danger of being accused of manipulating the market by going out and getting into something and then telling a whole group of people to go get into it or sending out an alert and getting myself in trouble that way. A lot of websites that give trades, they get around that by simply paper trading. We don't do that. We make it with real money, but we do it with an account for an individual whose money we're trading for hopes for them, knowing they need the money, and I guarantee the account, meaning any losses I pay with in cash out of my pocket. Okay, and any gains they get 100% of the gains. So we do trade with an account. It is not my account. I'm not going to share with you whose account it is, but it is someone who I have a personal relationship with and a vested interest in seeing that account does very well. And so I take it very seriously. Um, Another question: do we auto trade? Okay, a lot of brokers out there offer auto trading now, where where a trade alert website can send out a trade alert, and the broker will make that trade automatically. We do not offer an auto trade system, meaning we don't we don't have anything synced up so that it will automatically make the same trades we make in your account. Okay. We do that because this is a game. This is a challenge. As the challenge grows, okay, and some of you who were on back in the November challenge when we hit 40,000, and then we lost what, $12,000 on FCX. Well, that was a big hit, right? I mean, in the reality of it, we had gains of more than 12,000, but that was a big hit. And for different people, your tolerance for those things change. It's one thing to say, hey, we can lose 3,000, but it's another thing to get up to 50, 60,000 and then drop 20,000, which will happen, and then get it back up and go from there. The swings will become much more intense. For some of you out there who are trading with several $100,000 to begin with, a $20,000 swing doesn't seem that big. For some of you who, hey, you know what, you're just taking 3 grand and you're saying, let's see, a $20,000 swing could be huge. And so, you know, during this challenge and as the challenge goes, I don't want anyone to feel like they can't just take the money and take the gain at any time and move on. Okay. And so we do not do any auto trading for that. Another question that's often asked, are there any rules that you abide by? Yeah, there's some basic rules. There are some basic ideas and mentalities that I abide by. But my favorite part of the challenge is that any time I'm free to break the rules. I'm free to do what I want. That to me is the fun part of trading. That is the liberating part of trading. That's one of the reasons why managing funds drove me nuts. I was much more stuck with rules. For some people, that's the type of trading you love. Okay, I mean, Carl, who's on here, he's fantastic at going, with the rules and sticking with what works. And, I like to change it up, have a little different. Sometimes breaking the rules has paid off tremendously for me. 2008, I broke every rule in the book and cashed in big. There are times I followed every rule and, it's been more frustrating. So the challenge, anything's game. I will tend to make trades in the morning and in the afternoon, but when the market dictates, I'll go after. Do I use stops when it comes to the challenge? Very, very rarely. Very rarely will I use a stop. Occasionally, I'll throw out a trade that says, hey, I'm planning to buy at this price just because maybe it'll move too fast, but I don't do that very often as well. Most everything is, hey, end of day, where things at, and managing it from there. Another question, do I have a call or a put bias? Meaning, do I have a long or a short bias in the market? Generally for the challenges, I have a short bias, meaning a downside bias. Now, those of you who remember the first 100K gain, most of that was actually on the upside. Most of it was on the upside. This 21K gain here, that was mostly on the upside. Okay. Most of the other gains, though, when I look at them, they've been downside. But at the same time, most of the losses have come when I'm shorting as the market's going up. Okay, so the way I look at it is trading the market lower offers a lot more reward potential, but it also offers much more risk. Okay. So will I trade things up and down? Sure. I mean, you can go look at the challenge trades. I have calls and puts. I want what's going to make money, what I think the best odds are. And as I set up and I'm looking for trades looking out over the next challenge, I have some upsides and some downside biases. But I also know how fast an account can balloon when the market drops, when the market has a 3% drop, a 4% drop, a flash crash. The option values can appreciate so fast, much quicker than they can ever do in a call environment, unless you're trading something extremely overbought and overheated. So while I generally will trade with a bearish bias, I'm not afraid to trade the upside. I've had much success trading the upside, but especially in the market we're in right now, my eye is going to lean towards the downside. It's going to lean towards the downside and looking for downside opportunities over upsides. Now, I will get criticized a lot for that. In fact, some of you on chat here, I laugh at the chat system here and that we have at Trader Minute. Several of you have sent me emails saying, hey, can we get the negative chats off the chat system? These negative chats are just they're downers, and they're you've said a lot of different things about those, and I've kind of come back and said, we have things that we're doing with the chat system and upgrades, but overall, look, part of this whole thing is hey, my trades are up front and center, and they are subject to criticism. And everybody has the right. You have the right to criticize them, and I don't mind that at all, and I respect that. But being in that environment, I will not let the chats affect my trading. Meaning they don't have any influence. I could care less that the last trade didn't work. Um, I shouldn't say that. I care that it didn't work, but as far as going on to the next trade, fine. It is what it is. Let's go. I don't sit and sulk over a trade. I go back and I review them and go forward. But bottom line here, I've probably had one of the worst trading stretches of my career. Okay, and basically I chalk it up to another loss, and even this 3.8 gain, I chalk that up into some pretty lousy trading. Um, in the context of the challenge, it is what it is. I know how quickly, yeah, all these successes can add up. Some of you have emailed me and said, Jeff, how confident are you in the success of the next challenge given what's going to happen in the market? Look, if I wasn't 100% confident, I wouldn't do it. There's a confidence that has to be had, and there's a difference between confident and cocky. I went into the last challenge very confident, extremely confident. I've gone into every one of these except for the first one very confidently. But at the same time, I understand the reality. Okay, all the confidence in the world doesn't change what the reality is, and the reality is this type of an approach. Okay, this type of an approach is not a common one. I can share with you what the results have been. I can share with you what I expect going forward, but anything can happen, right? I mean, we could get into a trade and something crazy happen, and we have 40 grand on that trade, and it goes to 250,000. That could happen, or we could, in 5 trades, be down to another loss and have to chalk it up as the 6th loss. Okay, I don't make any promises. I don't make any guarantees. I can't. I've traded way too long. I've traded way too often. The thing that I worry about, and the thing that keeps me up at night, and the thing that has is kind of been one of my biggest reservations with Trader Minute is anytime you're sharing trades or giving trades, you don't have control over what other people are doing. And there's a risk that they blow their account with your trades. And, that's a terrible feeling. I've gotten emails from some of you who have taken unwarranted risks and have had some really down streaks. I've gotten emails from some of you who have, taken some of the things that we said, and you're sitting with some nice gains. And I love those emails and whatnot. But I know that risk is there. And as we go forward, as we do the challenge, if you're here for the challenge, stick with the challenge. All right. If you like some of the things with the Vibe and the Trend Rider, which my picks on those have struggled recently, there is a risk of a large account drawdown. Leave them alone. Okay, leave them alone. If basically you're sitting with a small drawdown or even a large drawdown, don't think you got to make it up all in once. Okay, the worst feeling in the world is to have a strong drawdown and to say, you know what, I've got to make this up. I've got to make this up. It leads into some really bad trading. Okay, it leads into some really bad trading. Let the concept of the challenge play out, and that would be my biggest recommendation, and kind of the way I respond to those types of questions. Okay. Yeah, JC, that's the beauty of the challenge. The risk is what you're willing and the hope for a huge reward. And, does it pay off? Yeah, I fully expect it to. Okay. I fully expect it to. Last question I want to address. Last question. Well, it's kind of a two-part question, and it's a difficult question. Um, Jeff, why do you make your trades public when if you have so much trading success, why don't you just trade your own money and be done with it? Why do you go through this? And the answer, well, and there's another question that comes on the back of that and says, you know, takes that whole mentality of, you know, those who those who can do, those who can't teach. Okay, so both of those concepts. Well, let's just take a look at this from a dollar and cents standpoint, right? I'm not making a dime off of the trades for the challenge at this point. Okay, I'm not making a dime off of the actual trades. Okay, but with a membership group of 300, and hey, we have a semi-successful challenge, we can grow that up to the 350, 400 limit that we're going to put on it. Okay, my successful challenges can lead to many other people having success with it. And bottom line, with the membership fee, becomes a drop in the bucket to those of you who are on board, and actually makes more money for Trader Minute than what I can make trading alone. Okay, so there's a leverage aspect to it. Okay, and that's from a dollars and cents standpoint. The other aspect, and some of you knew me from way back when I used to coach a little bit and teach people to trade. I like to teach. I love talking about the market. I love talking it with other people. I love teaching, and I love every aspect about that. That's the energizing part of the market. But I've also had great trading success. And there's a part of me that wants to prove that theory wrong. Those who can do and those who can't teach. And there's a lot of validity to the fact that those who can, they can do and teach. And the whole aspect of Trader Minute is to be able to do both of those. And so that's kind of the mentality here behind the challenge, and what we're looking for and what we're doing here. Please, please do not take risks that are beyond what you can stomach. I got a great email. I got a great email from one of you this weekend, and you had sent me kind of your story, and you had said, hey, you know what? I started trading. You started back on the March challenge. And you made a little bit of money with that challenge, and then recently have struggled. You've done some of the Vibe Trend Rider trades that haven't worked, and you've had a little bit of a drawdown. You were wondering when to give up, when to say enough's enough. Is it after two challenges? Is it after three? Is it after five? A year, 2 years, 3 years? And I emailed back and I asked one question. And I said, if trading is affecting the rest of your life in a negative way, it's not worth it. But if you can go through the ups and downs of trading and it really have no bearing on the other successes in your life, okay. So I say to you, hey, if you find that it bothers you, if the ups and downs bug you, if it's too much to handle, if it makes your life worse, it's not worth it. It's not worth it. Even the 100K success won't be worth it because there'll be a lot of stress on the way up, right? I mean, we'll get into one of those trades, and in the morning, it'll be up 10 grand, and by the afternoon, it'll be down 5 grand, and you're going, oh my goodness, I just had a $15,000 swing. And if that makes you angry, it's not worth it. It's just absolutely not worth it. Okay. So that's how I look at this. That's how I would kind of answer some of those questions. I'm more than happy to answer any other questions that you might have in regard for the challenge. Okay. Yeah, PW. So let's get successful. Why wait any longer? I agree. I absolutely agree. There. I tell you, I absolutely hate some of the recent way trades have gone. I look back at the setups and I go, they've been good, and I can't argue the setups, but. I've been asked by some of you, should I change my setups? Yeah, maybe. The challenge will allow me to do that a little bit. Okay. Thanks, JC. I appreciate it. Yeah, why does Warren Buffett still work? Yeah, good question. Good question. But absolutely. All right. Well, any questions, please feel free to let me know. I'm going to hop off here and let Carl share his top three here with you today. And again, the challenge will kick off Friday. I probably won't make many trades before then. I'll talk about some of the trade setups and everything else, but I may just forego making a whole bunch of trades before then, just to be as fresh as possible heading into Friday. I take the challenge very seriously, and want to be in the best place possible there. Uh, the other thing is the Education Week kicks off here today. After the market close, I'll give the first class there. Carl and I will kind of switch those on and off. I'll be giving four of the classes. He'll be giving four of the classes. If you want to join us live, you can do so via the live trade seat here. You can also access the recordings as well there. Thanks for hopping on, and we'll talk to you later. Take care.